So now that you have the basics of kind of multiple time frame analysis, I'll walk you through exactly how I would take a trade off of this shit. And the reason why we're breaking literally everything else has been one video, but we're gonna break this up into multiple parts because this is literally tying together every other concept, so it's gonna be a longer one, whether you fucking like it or not. So we'll go here. So first thing we'll do is we're gonna go over to our other graph, which is on, I think it's on CMC. So this is what I'm talking about with the very long time frames. This would be like a weekly move. And then, so it doesn't matter unless we get inside this retrace area. And then this would be like a monthly move we're expecting. Or actually, no, that's another weekly. This is like a monthly move down here. But no. So let's go back to our other chart so we can be a little more organized. How would I kind of put a trade together on this? Okay, so if this was an actual trade I was looking for, so get out of replay mode first off. So say, actually no, we'll stay right in replay mode. And we'll literally just sim through. We'll literally just sim through exactly how we'd take a trade. I'm putting y'all onto free game here. I don't want to use Friday because Friday's low key like was mad news. Shit, it's gonna look like I'm capping because I fucking because obviously I'm gonna see exactly how price is moving, but I'll try to not look at it. So when would we hop on market? Probably around 7:45 because that's when we get into school. So first off, we'll see like larger time frame what we're doing. So did we get around a 120% extension around there? So blah blah. Doesn't really matter. So based off this medium time frame, what are we doing? We're going up. So I'm analyzing this, bro, and I'm getting like foggy brain, just like how I would be in the morning. So we can kind of see that we're leveling off at this standpoint. So we'd really want to see like what bias we have. So this is kind of the way I think of it. So right here, 127% extension, high time frame. So you can see we're kind of entering the zone between 100% and 127%, which that's like between that area is a very prone. So this is gonna sound so repetitive, but it's a very prone area for us to like stop going up because if we extended that high, we're not really taking out any liquidity. I guess if that makes sense. Once we go past 127%, unless it's news based, we're not taking out any real liquidity, so it's probably not going to do that. So, I mean, we can use that confluence. Now, okay, so this is a big one. Now, just because our bias is short time frame, or I mean, our bias is that we're going to go down, that doesn't mean we're expecting it to fucking wipe out these lows. Like, okay, so let's do some quick math. 202 to 204 pretty much. Do we think we're going to have a 200 pip move? Fuck no. Especially a reversal. Let's use our brains. But no. So we're on an uptrend, which is useful. Yeah. But because of how high we extended on this uptrend, that's our bias for a downtrend, if that makes sense. So basically, what are our kind of signs here that we're going to start going down? Well, we're not trading off of this time frame. We're just using it for confluence. So let's get that one in there. So we're not taking out that low, now that we know that. So we're thinking, okay, so this is an area where price is prone to reverse. Not reverse, but retrace. Down lower. So what else do we get? What is this? Consolidation. This is consolidation. So that means price doesn't know where it wants to go. And we're in a zone where price is prone to reverse. So, what can we probably assume if price doesn't know where it wants to go and the zone means it's probably going to reverse? Probably going to go down. So, whatever, we have that. That's really our confirmation. And then we have a fucking order block retracement, order block retracement, order block retracement, order block retracement. That's how I want you to view every time we have all these highs, I want you to view as equal highs and order block retracements, which sign is going to go the other way. So are we taking a trade off of this? Absolutely fucking not, because you never know. Market could just go up like this instantly, and I'm happy I have this tool back. Market could always go like that, or it could go like this. So just trading off of this, you probably have higher than a 50% chance, if I'm going to be honest. Like, you might be able to be profitable off of this, but it's not the highest possible confluence you can get, so why would you want to take it? Anyways, so basically, what we're waiting for, now that we have this area where it's prone for price to reverse, we're going to watch for it to actually reverse. And then, after that, we're going to wait for this reversal to actually push below this small time frame low. And this isn't going to be an everyday thing. This is just like an example of what we would do on this day. When I do like my course or whatever, which that's how you know I'm not doing this shit just for money, because I haven't even fucking made the course yet. I'm going to be honest, I haven't put a single second into the course yet. But once I do the course, I'm going to teach every single variation, every single reason why I would take a trade or why not, every single strategy. And then I'm also going to give y'all like like 2 to 3 hours of examples. So you're literally going to be able to trade off of this day, every day this month, every day this year. You'll literally be able to trade off of every single market structure every single day. Unless we have news. Don't trade on that. But no. That's kind of the purpose of the course, is this stuff is always going to work on this stuff's always going to work first off, but it's going to teach you how to look for each different thing and when to look for it and all that. But anyways, enough on that. I don't want to be a fucking salesperson with little butthole. But no. So off of this day in particular, we're looking for this small time frame low to get shot out, and then if it doesn't get taken out, we'd be looking for a new high to get made. To formulate our bias, at least for this shit. So boom, boom, boom. Okay. Are we gonna take out that low yet? Oh, maybe not. So it's like an order block retracement. Okay. So we basically already took this shit out. But we'll wait for it to actually get taken out just to be sure. Okay, so we took out this low. So now, we could get in a trade right here off of that break of structure because we have enough kind of confluences. So we could get in a trade right off of that, and since we're going off of medium time frame right now, we could look. This is gonna always be our first bias and first take profits will always be like this small time frame kind of move. So now that we violated this low here, we're looking for this medium time frame move. So we probably wouldn't take any partials on this one because, see, price is already at this 79-62% area. So we wouldn't really have any take profit set at that area. So then we'd zoom out to the next time frame, which would be right around this area. So this would be like our kind of medium time frame low, and then this would be like our high time frame low. So that's how we're basing all of this shit basically. And then we're gonna use our little fib to kind of find the degree of this. So right here would be, and I normally use 2 different fibs for my take profits, and like it's not actual micro or macro structure like technically, but whatever the smaller fib is, I just write micro structure. Whatever the bigger fib is, I write macro structure. So 79% micro retrace. And then this is honestly new. I just started doing this week, but to kind of help me like continue to think what like of where I'm thinking, I'll literally put what my bias is. So I'll be thinking like bearish bias. Um, I won't do that for the rest of these, but kind of just to help y'all, I guess. 62% micro retrace. And then once again, we're not going to think of the 38%, even though this is a very valid point because for this one, it would be 62. Like, this is actually, if you would have gotten in off of microstructure, this is very valid to use this point because it's going to probably be pretty close to whatever this 120% extension is from here, and it's also probably going to be pretty close to wherever the 62% extension is. But we're not trading off of that structure right now, so we will kind of more or less disregard that. So then 38% macro retrace, 62%. Okay, so that's basically where we would literally just put our take profits in liquidity around these areas that like fall in between these zones. So blah blah blah. We'll look for this. Whenever I take a trade, most of the time I won't use a take profit, because I'm manually taking partials, but if anything, I'll put it at the lowest area I'm assuming price will go to. So now we don't need this high time frame, either of these high time frame lows, medium time frame lows, whatever you want to call them. So now that we have that, that's basically how we would formulate a trade off of this, and then we would basically just wait for every one of these to hit. I'm not gonna lie. Whatever, that's normal. So if you're kind of scared, you low key, yeah, this would be a micro break of structure, but we're not trading off of microstructure in this trade, for example. But no, you could like get out of that if you wanted, but if we get a micro, so if we got like a micro BOS after that, then we might get out of it. But do we? No, not yet. See, exactly. Like you might think get out there, which that's not going to be like a crazy good trade to be honest. Yeah, you're making like 400 off that. And once again, we are like this is an example. You're not going to just fucking formulate a trade off of fucking goddamn small time frame, like your multiple time frame analysis and your fucking fib retracement. You're going to use other concepts if you're using the strategy, but no. And that's kind of the nice thing about this strategy, to be honest. If, because of how good your entries are, to really invalidate this trade idea, we would, for like a firm invalidation, we'd wait for a higher high. But to really invalidate this, you could just, fucking, where's our trend line? You could just wait for us to fucking violate this upward trend, or I mean this downward trend, and then you could get in. But like even after, so you're like your stop loss would be in profit, and then what are we thinking if we violate the downtrend and start an uptrend? Well, we know our high time frame is on an uptrend, so what are we doing? Instantly getting in an upward position. Like, come on, bro. Let's think. So no, that's the nice thing about when you're using multiple time frame analysis, you're already viewing all this shit. So you have a trade idea for a small, because this is how I'll like hit 2 back-to-back heater trades. Say we're using this strategy, we would get in on the retracement down, which would be like a few bands, and then we're also getting, once price reverses inside of this zone, we're also getting on the move right back up, which is the big trade, like the 10K trade, because that's what I'll do most of the time. I'll get like I'll get like an $800 trade, and then I'll get a few $1,000 trade after that because I trade the way down and then I traded it back up, or vice versa. But no. See this? If this was live, this might trip me up a little bit because we kind of retraced this order block 3 more times. So I I would I wouldn't necessarily get out here, but I would think about it. Like depending on what my other confluences were showing, I'd think about getting out there. Would I? Don't know until you have your other confluences, but I would think about it at least. We're accumulating right now. Once again, this is just an example of multiple time frame analysis. Is this a realistic trade? Not necessarily, because I mean, what? This is spanning fucking. We think of here, and I'm gonna be honest. If we're really thinking of this shit here, this being like our trade, we would mark one of these low or highs because what's our bias? Our bias is built around that move, so why would we have anything crazier? So realistically, that's like a 2-band trade right there. I don't really love this trade idea, so I'm probably just gonna zoom to another one right now to give y'all a little more for this fucking a little more bang for your buck. But no, just know that shit hit. Let's go to another one. This could be a perfect example actually. So we're basing our trade off of this move. So once again, what are we doing? High time frame, going up. Uptrend, high time frame. We have this high time frame high time frame low, high time frame high time frame low. We can infer that this is going to be a low. So what fully justifies this move? Blah, 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 blah. So what are we looking for? We're looking for a medium time frame high, which like I said, these are prone to change depending on the time. So we're waiting for this high to get taken out. We'd also use like SMTs, liquidity concepts, all of that. If we're doing another trade. So right now, what did we just get? A lower low. So straw or fib. Fibs are crucial in the way I trade personally. I'm always using a fib, but no. So basing it off of this, what do we have? 100%. What else do we have? Probably an order block retracement. So let's think here. So it makes sense for price to react in this zone and flip. So what are we looking for? Price to actually flip. So this is kind of a microstructure, so I wouldn't really take it necessarily off this. Right there. Price flips. What do you think we do next? Can anyone guess? Where's the, fuck. I hate this shit, not having my goddamn, what's it called? Not having my goddamn, like, quick menu is actually gonna start getting on my nerves so bad, bro. Yeah, this is gonna make me really mad, bro. I'm not gonna lie. Okay. What is it? Like, bro, are we serious right now? I've never used that shit in my life, I'm not gonna lie, and I'm trading pretty good, but anyways. Okay, so what do we have? Order block getting filled right here, or it's probably about to get filled. So, if we got a break of structure, plus we got this order block filling here, pretty damn high confluence, so what would we be thinking off of this? We would be thinking longs because we're in an area where it makes sense for price to reverse. So you could enter off that. You could enter off this retracement into the order block. And then what are we looking for off of this? Well, we're judging it off of this major time frame. So if you're like scared, the only reason I would really take any partials here before the move's fully done is if I was scared that it was going to take too long for price to do this. So like if I thought it was going to be like a few hours, that's the only reason why I would take anything out of this. Let's get rid of this. We don't need this anymore. We already entered. So, oh shit. Right here, 62%. And this another reason why we wouldn't really use this shit is because when have you ever like used a 62% extension? It's a retracement. So this is if you're trading against the trend, which you could you could kind of make an argument for because we are kind of in a downtrend right now. But high time frame, we're in a fucking uptrend. So let's think that one through. So then we could also make an argument for this 120% extension. I just call it a 120%. Obviously, it's a 127%, so let's think of that, but no. So we have this. Bro, I'm fucking tired. Holy shit, I forgot how to spell extension. I don't even think I spelled it right either. Oh well. I trade. So we're going up here. So then this is like, realistically, this is where we're thinking price is gonna hit, not gonna lie. Is this 127.2% extension. That's where it makes the most sense for price to hit. Yeah, so we spelt it right that time. But no. That's where we're really thinking for price to hit, but once again, we could take any of this shot. So yeah, let's get rid of this fib right now, Loki. So yeah, this is what we're thinking. Whatever. We're thinking since we're in an uptrend, we're gonna actually go up, but if you want to play it safe, that is still at the lowest take profit of $4,000, $5,000 trade. So even just based off of hitting that high again, bro, we're still in that shit. So we're waiting. Which, low-key, we'll throw this all the way up here. So we just broke this other high, so that's even more confluence that we're going to go up. So if you were scared, you could take another partial off of this closure. You could take one of your partials up here. So say you have like a $2,000 trade, you could partial like, I don't know, like 200 off of this move right here because that's a micro BOS, which is a sign we're reacting. But no. But it also makes sense, like supply and demand concepts right there. Makes sense for us to react upward like that. So now, off of this, we can't move our stop loss past our open thing for some reason. On this, it never works that way. But you could bump your stop loss to this low now. And then, personally, if I was trading this, I probably wouldn't because I'd see the full move. And we don't have an actual reaction, but if we get a reaction at this 62%, like an actual micro BOS, no micro BOS, so we wouldn't take any take profits yet. Still wouldn't. Still wouldn't. Okay, so right here, we would take our first partial, we'd probably close about a tenth of our position. So say we're in a $2,000 trade, right on here, 200 bucks, close at that. We just made $1,000 off that move. Our stop loss is already up here. So yeah, we just made $1,000 off of that move, and then we'll see if we keep going or what we're doing. Okay, so we broke that. So then when would we take another partial? Right there. So we take another partial right on this closure. So we'll get the calculator out. We'll do this nice and good for y'all. I don't understand this. Whenever I'm recording, I get tired so much quicker. But no. So 200 times 5, 1,000, then 200. So we're already at like $2,000 for the trade off of partials, and we still have say we did 10 laps, we still have 6 laps left. That wick that might look bad because it's bearish, but that's actually really good confluence that we're going to go up even higher because that fucking wick is crazy long. So we just took out a fuck ton of liquidity from the downside without actually going down. So right on this candle, we would likely, just because of how fucking crazy that's an engulfing in that, we'd probably close like we close 1/10 of our position on the other one. So we have the $1,600 position. We would probably close at least half of the rest of our position. So that would be 800, and then at that risk reward times 4.5. So now we have $5,600 we made so far, and our stop loss is above break even, so we have to factor that in. So we let the rest essentially ride until, so off of this little break of structure, we would, it kind of looks like momentum slowing down, so I'd honestly keep the rest of my position open for now. Now we have another break of structure to the upside, which we like a lot. So then if we get a micro break of structure like we just got right here, this is where we'd close out the rest of our position because now we're completely violating the uptrend. So we're thinking downtrend because we just got a low and then we got a high, and we can infer that this is going to be the next high because we just got that micro break of structure. So we can infer that that's going to be a lower high. So we would realistically close out the remainder of our position, which is like $800. So then plus 800 times 4.71. So we just made 10K off of that trade. If we were to take this, and that's not even using the rest of the strategy. That's not using any liquidity concepts, SMTs, which when I'm backtesting and replay trading, I never use SMTs because why the fuck would I load up 2 other charts and zoom in all the way to the same replay settings and everything? I wouldn't. So yeah, and then we can watch what the rest of the trade's gonna do, but if this is me, realistically, if I just made 10 bands off of this trade, I'm not even gonna watch it because then I'm just gonna be like, fuck, I could have made more. Like, you know what I mean? Then we'll be like, fuck, why didn't I leave anything run? But no. So yeah, I mean, now, last video taught y'all what multiple time frame analysis is, and this one we just taught you how to make like a few bands last example, and then we just taught you how to make fucking 10 bands off of it. So I mean, if you're not, I'll teach how to actually set up a paper trading account and like how to check news and how to check fucking what's it called? How to check like fucking like how to set up a paper trading brokerage account, all that. But if you're not able to simulate the charts and make a few $1,000, 10K a day on this shit yet, then I don't know, get some more market time in. But yeah, at this point, just this like 30-minute video, I'm gonna try to wrap it up here. But at this point, you should be able realistically to fucking take some pretty damn good trades. And if you want to wait for me to set this shit up, if you want to wait for me to actually explain how to do it and tell you how to do it, then that's completely fine. Whatever, I will be posting videos. But if you want to just start going at it on your own, fucking look it up on Safari, ChatGPT, whatever. You're really at the point where I would have no issues with y'all starting trading. I mean, you know enough to start making money. And all the other videos will only teach you how to make more money, but you are realistically, just with this stuff, if you've watched this video and all the other videos, you realistically have enough at this point to fucking start making some serious money. But yeah, have a good one. I guess I'm gonna go record a psychology video now.